All right, guys, welcome back to the stream. I'm JC Parets. I am joined once again by my esteemed colleague, Mr. Sean McLaughlin. What's up, buddy?
What is happening?
I like that our trade today is the U. How about that one?
All right, look, you went there early. I warned you we might do this. Look, let's talk football for a second before we get into any of this other stuff, because this is important. It's Thanksgiving weekend, a big football weekend. Look, you and I don't agree on a lot of things football. But I think you and I might agree on this thing. Why the hell do we have to watch the Detroit Lions every Thanksgiving? Why? What makes them so damn special?
It's one of those things like tradition. It's always been done this way. You know, it's one of those things, you know, we see corporations and Wall Street, you know, why are mid-caps still 2 to 10 billion? That doesn't make any sense. So we just changed it. And, you know, for us, mid-caps go to 30 billion, 35 billion. It depends what kind of mood we're in. Why do we watch the Detroit Lions? I don't know. You think like one day they're going to be good again, and then, you know, like in Major League, they suck again.
Look, if they couldn't figure it out with the greatest running back in the history of the game, I mean, they're not ever going to figure it out. And look, I got a lot of friends with Detroit roots. Much love to all you guys, but come on. Let's see another team out there. I mean, if at the very least, man, like both of these games, and I'm not going to crap on Dallas. At least Dallas is a winning franchise overall. But like, Thanksgiving weekend, man, dome games inside. Come on, man, do it outside. I want to see a threat of snow. Come on, let's make it real. These dome games are crap.
The best two players in the history of that franchise quit in their primes. They'd rather just not play at all than play for the Detroit Lions. Just want to throw that out there. Listen, I'm a Dolphins fan, so like, you know, stones and glass houses and whatnot. But needless to say, let's get into the trade, Shawnee baby. Right. You know, I'm seeing a lot of pessimism out there. You know, stock market across the board, a lot of things making new all-time highs last week. You know, tech was down like 2 days, and it's like, oh my God, the world's coming to an end. Let me just remind everybody that we closed last month out on the equally weighted S&P 500 and equally weighted NASDAQ 100. Both closed at new all-time highs. And this month, we won't know till next week, but we're on pace once again to close at the highest levels ever for the equally weighted. So these people with, you know, bad market breath, it's only a handful of names leading this market. That's just simply a lie. The math suggests otherwise. To me, it's a bull market. I think we need to be buying stocks.
Yeah, these charts are not bearish, JC.
New all-time highs are not a characteristic of a downtrend. I've gone back. I've done the work. Trust me, in downtrends, you don't see a lot of new all-time highs. You just don't, right?
You don't. You definitely don't.
And you know what? In uptrends, you tend to see a lot of new highs. It's like a thing, you know?
So, you know, this dovetails nicely into what we want to talk about today. I mean, as much as people want to get all freaked out because of, you know, short-term price action over the last few days, I mean, our team, we're looking at things differently, and we're seeing a lot of great setups, a lot of great things. And in fact, in our analyst meeting this morning, we couldn't settle on one pick to make a trade in today. We were like, no, man. I mean, there's a lot of good ideas, and we weeded it down to like the top two, and then we're like, I can't pick one. Can you pick one? And ultimately, we said, screw it. Let's do two today. Why not? The Turkey Tuesday, the Turkey twofer.
The Turkey twofer. It's our pairing, right? As you said. Sean, why don't you tell everybody how great the U is?
Oh, I see what you did there. Okay, this is not a football discussion.
Tell them how great the U is, nonetheless.
Unity Software, ticker U, unfortunately. This is a ticker that was surfaced up in the follow the flow report last week, where there was some unusual options activity that just put the stock on our radar. Doesn't mean we're going to jump in, you know, balls deep, going, you know, YOLO calls on just because it's on the follow the flow report, but that surfaces great ideas for further research. And so this was one of the names on there. And as Steve Straz, our partner, wrote last week in the report, he said, hey, look, this stock is a bit extended. We'd like to see it pull back, and we'd like to buy any weakness as it comes back to this level of support that you've got highlighted there in gray. That it kind of corresponds to the 175 area. And I mean, almost as if he scripted it that way. I mean, the stock just basically traded straight down right back to 175. But more importantly, it held nicely.
So far.
So far, right. But we like the setup here. And so, boy, it's playing out just the way we wanted it to. So we're getting long today.
Implied volatility is a little high.
That's right. So implied volatility is a little bit high. So I didn't want to do, just a straight call trade because that, would put us at a disadvantage. Doesn't mean it can't work. But I like to skew the advantages in my favor as often as I can or in any way I can. So we're doing a bull call spread because, man, the out of the money calls in this stock have a lot of juice in them. In fact, I didn't put it in the report that we wrote up, but if you go an equal distance away, the puts versus the calls, the call premium, last I looked, was like twice as much as the put premium an equal distance away. So the options market's definitely pricing in some upside here. And so we're using that to our advantage to kind of reduce the cost for us to participate in a bullish trade. Now we're capping our risk, we're capping our potential profit by selling the out of the money calls.
Capping the risk too.
But we're capping the risk, right? And we're giving ourselves, more importantly, JC, a higher probability of profiting in this trade. So we put on the bull call spread. We bought the 200 calls. We sold the 250 calls in February. For those of you who may have seen the blog post moments after I posted it, there was a typo in there, and I've since corrected it. I confused some people. I talked about March calls, but no, there are no March calls right now. It's February. So we bought it for $10. And my plan with this, JC, is, it sounds crazy to say it, but I'm just looking for a little pedestrian tripling of my money. I'd like to get out at $30. I paid 10. I'd like to get out at 30.
A pedestrian tripling. Did you just say that? With a straight face? A pedestrian tripling.
Hey, you and I have been spending a lot of time in crypto circles these days. So when you talk about tripling your money, that's just like yesterday's news in crypto, right?
Touche. All right, so just to be clear, before we move on to trade number 2, we are buying a Unity software, ticker symbol U, February 200, 250 bull call spread for around $10. That means we're going to be long the 200 calls and short an equal amount of the 250 calls again in February, just to be clear. So then later on in the meeting, we're sitting around and being like, actually, this was at the beginning of the meeting, and I'm like, you know what? We need to look for more stocks that look like Cheniere Energy. We want to be fishing in stocks where momentum did not reach oversold conditions over the last month or so, while some of these energies and cyclicals have corrected. And I'm thinking to myself, what stocks look like Cheniere? What stock? And then it just hit me. It's like, why are we looking for stocks that look like Cheniere? Why don't we just buy Cheniere? LNG, the ticker symbol, liquefied natural gas. So you're getting that natural gas exposure. Cheniere Energy LNG. Like in the second or third day of technical analysis kindergarten, they teach you about these descending triangles. What did you call it, Sean? You called it a...
I called that the T-Rex pattern. It looks like a T-Rex to me. That's what my 7-year-old son would say. He would
the T-Rex pattern.
T-Rex.
So these are the T-Rex's arms? Is that what this is?
Yeah.
All right, the T-Rex is... All right, that's fair. I'll give you that one. All right, the T-Rex pattern in Cheniere Energy. And Shawnee Baby's like, volatility's a little high. I was like, sounds to me like a risk reversal is in order. And you agreed.
Oh boy, you get so excited about any opportunity to put a risky on. But
go big or go home. Let's go, baby. Let's go.
Well, look, in this case, because you mentioned it, I was like, well, all right, I'll humor JC. I'll look to see if a risk reversal makes sense here. And sure enough, to my pleasant surprise, it actually did make a lot of sense here. It doesn't show here on this graphic, but when I looked out into June, the June options was the strike or the expiration I wanted to go for to give us some time, give us 6 months for this thesis to play out because we're bullish long term. As we've discussed many times before, both on blog posts and even on these live streams, when I'm buying long calls, I like to buy the 25 delta. That's just my sweet spot for the right amount of leverage with the right amount of possibility of profit. That's what I like. So I was looking at the 130 calls, and sure enough, if I wanted to sell puts at a price that would compensate me for buying the calls, the 90 strike put offered enough premium to do that. And that 90 strike, oh, look at that. It's magic. It corresponds with the past overhead resistance that plagued this stock for about 6 months.
You, Mr. Technician over here, talking overhead resistance.
Yeah. I mean, I don't like to give market makers props, but sometimes they know what they're doing. They know where to put those 25 delta strikes. And so that put right there at 90 offered us just enough premium. That graphic doesn't show the premium exactly the way I'd like it to, unfortunately. But when I put the trade on, I was able to get the calls for just a little bit cheaper than what I sold the puts for. I was able to net a 25-cent credit on the whole thing. So basically what I did is I bought the calls and I sold an equal amount of the puts to pay for those calls. And the net result was a 25-cent credit. Now, people always ask me like, oh, I saw this trade an hour later, or I'm looking at the next day and I can't get 25-cent credit. I can only get 10-cent credit, or it's $1.
Take the money. Take the money.
Well, what I say is like, don't get hung up on the amount of the credit. We're not playing for the credit here. That's not the goal. The credit is if anything, it's incidental. Okay. But just for completeness, I just like it to be a credit because I like credits. I like to get credit, JC.
Who doesn't? Who doesn't?
Right.
Credits over debits. That's how I learned it.
So if this stock just sits here and does nothing for the next few months, then both of the calls are gonna, or both of the options are gonna kind of fade towards worthless. And if they do expire worthless, then we walk away with a credit. But again, we're not playing for the credit. It's unlikely gonna play out that way. What we're really trying to do, this is always the goal with the bullish risk reversals, is we want to take advantage of any upside price action in our direction. We're bullish, right? We want the stock to go up. We want to take advantage of the fact that if and when it goes up, we want to sell. We want to look for an opportunity to sell half of our calls and use those proceeds to completely cover, to purchase back all the short puts that we have and do it for, no cost. So the example I put in the blog post, I said, if I could sell, let's say, we're showing a two lot here, right? I bought 2 calls, short two puts. So if I have an opportunity to sell one of those calls for $6, and then I could turn around and buy back the 2 short puts for $3 each for a net cost of $6, that's what I want to do, right? I want to take those puts off. So then when I do that, JC, then I have no risk in the trade, okay? 0 risk.
And how much upside potential?
It's all upside, theoretically unlimited upside with no cost. And
no cost, no risk, and unlimited upside? Shoot, where do I sign up for that?
This is why JC loves this trade.
Well, when we're super bullish and volatility's high, and there's well-defined risk, for me, what's there not to like? Those kinds of trades, not to mention last time we put on a risk reversal was that Freeport McMoran, and that worked out real well.
That worked out really well. Now look, this LNG, because there are naked puts when we put the trade on, there is risk. There's theoretically unlimited risk. The stock can go to 0. I don't see that happening anytime soon, and certainly not overnight. But we do have to manage our risk. And so the level that we're watching at is $95 per share. If LNG trades below 95, that's our signal to get out. That's our signal that, hey man, our thesis is wrong or early. Either way, we don't care.
Which happens.
Time to get out. Yeah. So 95 is the level we're watching. Assuming that level never gets hit, then this trade's either going to work or our options are going to expire away worthless and we walk away with the credit that we collected when we put the trade on.
To the moon, Sean. To the moon, baby.
To the moon. Nice hat there. What is that? Is that Shibu Inu?
Yeah, a little Doge. Had a nice morning in the old crypto world. So, it's kind of in Doge kind of mood. Not that I made any money in Doge. I don't own any Doge. I just have a Doge hat. People send me stuff. I got all sorts of crypto swag.
Did I hear you're like some kind of like slumlord in some virtual real estate scheme in the NFT world?
Something like that. I own some land in Decentraland that may or may not be worth something one day. Basically, me owning land in Decentraland is kind of like a call option in and of itself. The most I could lose is what I risk. Maybe it's worth a lot more one day. It probably won't. It's just another day, right?
I just love any opportunity that I can call you a slumlord. So that's good.
Slumlord. Yeah, I have a 16 by 16 plot of lot in the middle of nowhere in Decentraland. So slumlord's a little aggressive, but sure, whatever. I've been called worse things.
Before we end this stream, I know your fans want to know, JC, what are you drinking at Thanksgiving this year? What's the pairing?
Come on, listen. Everybody likes to get creative. A lot of people, I should say, like to get creative. I'm classic, baby. I'm classic. I go Pinot Noir, French Burgundy from the Côte d'Or, anything from Côte de Nuit or Côte de Beaune. You're good to go. You can't screw up. I got a Pommard waiting for me. It's going to be beautiful. It's going to be lovely. So Pinot Noir from the Côte d'Or. Keep it simple, stupid. Don't overthink it.
Man, listening to you speak French, man, it's just I can't get used to that.
When you drink wine with me, Sean, you'll figure out a way to get used to it.
I'm looking forward to it. All right, buddy. This was great.
All right, let's recap real quick. So we're talking about the LNG. So this is Cheniere Energy LNG. We're doing the June bullish risk reversal, 91.30 bullish risk reversal for approximately 25 cent credit. This means we're going to be naked short the 90 puts and long an equal amount of the 130 calls. And then let's just review the one more time the trade. We are buying the February 200-250 bull call spread for around $10 debit. This means we're going to be long the 200 calls and short an equal amount of the 250 calls. Unity Software, you baby.
Regardless of the outcome of this trade, this is the last time I ever trade this symbol.
Yeah, well, if you make money from it, I'm pretty sure you're going to buy it again. All right, guys, I'm JC Parets. This is my homie, Sean McLaughlin. Everybody have yourself a great Thanksgiving. Be safe.
Take care.
Adios.